Let me give you an update from the Housing Finance Strategies DC conference that I participated in last week. It gave me a sneak peek to the future development for the government with respect to new technology, as well as various considerations for making home affordable. So number one, let's touch on the rental market. HUD and FHFA are working on the new initiatives to help low-income families by giving incentives to the landlords for allowing Section 8 tenants to move into the rental property. This would help government initiatives to reward landlords as well as low-income housing rentals. Number two, let's touch on the builders. So Pulta Homes was on the conference, and they mentioned that they have many spec homes rebuilt by builders, causing many new homes to be unsold in today's market. They hope that next year, lower interest rates will start moving the inventory. However, I don't think they get their wish based on what Fed is telling us. As expected, builders are now offering buy-downs of the interest rate to get the interest rate below 5% while still making profit on the sale because of the real estate prices. Let's touch on appraiser updates. FHFA and a few servicers evaluated AVM automatic valuation models versus BPO appraisals over time and surprisingly announced that some of the AVM providers were more accurate than the appraisers over time. I would expect movement from GSEs to bypass appraisers in lieu of AVM valuation to qualify for a new mortgage. Let's touch on Ginnie Mae updates. Ginnie Mae is looking at the new technology. Ginnie Mae is really diving deep into the technology latest and greatest to enable foreign investments into U.S. housing market. President of Ginnie Mae wants to make the loan-level data very transparent to all investors, not just U.S., but also foreign, in the easy and consumable fashion. I personally welcome the introduction of latest technology in Ginnie Mae, and it would serve a great example to other government agencies like Fannie Mae and Freddie Mac. Let's touch on the servicer updates. That was a major discussion. The major issue for the servicer for GSE-backed loans is evaluating what loss-meet options are available and applied to any given situation. There are few available work streams that are preferred by servicers and GSEs today. Number one, extending the maturity of the loan to 40 years. That would result in a new mod for the loan and allow borrower to catch up on the payment they can afford today. Evaluating trial payment plans. Payments as an option to review an ability to repay rather than looking at just the income level documents. Self-service, short sale, and deed in lieu of foreclosure for the borrowers using the web-based interface to expedite the approval process. Payment reduction with the partial claims, where servicers set aside money to supplement payments that they get compensated from for the future refis and the sale. So what is a partial claim? It's the interest-free loan from HUD to get caught up on overdue payments. The loan doesn't have to be repaid until the first mortgage is paid off or when you sell the property. All of those updates create enormous amount of opportunities on the market for my firm and your firm. And I would love to chat with you about these ideas at the MBA Annual Conference in Philly and ABS East in Miami.